I want to start off by asking you about S&P's call on Australia's fiscal position, saying that it's fine if their budget is expanding, their budget deficit rather is expanding, because they can still manage to honor their debt commitments. And so do you think that just opens the door for increased borrowing by the government in the foreseeable future?
Well, I think that may be an inevitability regardless of what S&P says. I mean, at the edge, it could push them a little bit more, depending on need. But I think our S&P's point perhaps is around the fact that, overall Australia still has got fairly low debt levels compared to the others in the G10. It's also got exceptionally low interest rates, and with yield curve control in play, I think the mix of factors is that this is that the borrowing in the short term is going to boost the recovery, which in turn will help to fill plug those fiscal gaps. So I think that's where S&P is coming from, and that I think is a fair assessment of where Australia is. And I think the final point is, if we do see infrastructure impetus recovering in the region, that could also be somewhat positive both in terms of trade and growth for Australia, lending it some credibility on the ratings.
No, those are excellent points. Low interest rates as well as a low debt to GDP is definitely a plus for the Australian economy. I do want to, as a follow-up, understand from you, do you think that then this wage subsidy program can continue to run, even though it's burning a big hole in the government's pocket? $11 billion per month is what they're spending on the program.
Yeah, I mean that's by far I think that the burning question, not just for Australia though. I mean, US will confront the same question, and I think many governments in a position to provide that will be faced with that. Just so that they can, avoid permanent scars. The way forward inevitably will be to phase this out and to step this down and make it a lot more targeted. I think the first, deluge of unemployment benefits was really to cater to the cash flow shock and the revenue shock. I think going forward, it needs to be a lot more of a nuanced call, because this cannot continue indefinitely, and that's for sure. So it's going to be a very dynamic and fluid trade-off between the scars it can cause on the labour market versus what the government can afford and the incentives it should put in place in the broader industrial scheme of things.